Hey, Walter, before we start this episode, how about we do the drawing for last month?
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Let's do it. You got your randomizer on there? Is that what's going on?
Yeah, I think I'll put it in a certain order, and then you pick a number, and then we'll see who that is.
Okay.
So we got 26 comments and ratings from iTunes. So why don't you pick a number between 1 and 26?
17.
17.
Let's see what we get.
All right, cool. So I'm going to hop over to YouTube. And so Veronica Henderson, you are the winner for last month. And what are you giving away, Walter?
Well, we're going to send her a psychology book. How's that sound? Good?
Sounds good.
Yeah.
And that's from you. And for me, Veronica, you get a 30-minute coaching call for free.
Cool.
So,
all right. So Veronica needs to send in her, and where will she send in her, or how will she send in her address or whatever? You know what I mean?
Yeah. I'll try and contact her through YouTube, but Veronica, you can send in an email to hi@thinkprofit.io, and that will come to me, and I'll take care of you.
Sweet. Thanks, Veronica.
Yeah, cool. Thank you, Veronica. All right, cool. So let's get into this week's episode. I thought we could talk about feedback loops, like positive feedback loops, and creating rapid feedback loops to improve yourself faster.
Right. Okay. Yeah. Well, so from my point of view, the lower the time frame you're trading, obviously, the faster you're getting feedback on your trade decisions. But beyond that, one of the tricky things about trading, I think, is getting stuck in the improvement idea because there's the element of chance, right? So because we can't really account for the random nature of our sequence of wins and losses, we can anticipate losing streaks, the worst type of losing streak, the typical losing streak, the biggest sort of win streak. We can use that you can use that to change the way that you manage risk and stuff like that if you want to get really sophisticated. But the other thing is there's a real temptation to ascribe responsibility for a given trade's outcome to elements of your system and then have to go back and, you know what I mean, rejig it. So that's one thing that's really critical. So the two takeaways from me would be, if you're trading lower time frame, the good thing is if you can do that, you will get almost instant feedback. Like if you're trading the 5-minute, 3-minute, 2-minute charts, you're going to get this feedback like really quickly, which is great. But there's a real temptation for us to tinker with things. You know, it's never like, you think about it. When the Wright brothers came up with the airplane, the one that they got off the ground, you know, lots of people around the world were trying to get off the ground.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
And interesting fact, did you know that Harry Houdini, the magician, was the first guy to fly in Australia?
Yeah, I heard about that.
Yeah, he packed all this stuff and brought it down to Australia. But anyway, so that airplane that the Wright brothers created, like, we as a species, we don't like just go, we got it. We got an airplane. We're good to go. You know, like, we don't do that. We're always kind of like making it faster, better, more comfortable, more efficient. Like, that's how we're wired. Like, we're engineers by birth, really. And even you can watch even like little kids when they build a sandcastle or something. They're just, you know, they're always trying to figure out, okay, well, this collapsed, so I'll do that. You know, it's in our nature. And so I think for trading, that can be a bit of a slippery slope. And I'm always kind of guarding people against that, you know? So that's, but yeah, so your feedback should be, so you want to account for hindsight bias. So a good way to do that is with your journal. So in your journal, you can write down how well you think this trade is going to work out. Like on a scale of 1 to 10 or 1 to 5, I think it's like a 5. This is brilliant. This is a great 1 to 5. This is a 5. This is a winner. And then you can go back and see if your intuition really works. And you can go back and when you exit your trades, go back and look at your exits. How well did you sit with your rules, or did you change things up? So that's a really good way to incorporate that, especially if you're using higher time frames like I am, and your trades kind of take like, why did I take this trade again? Like, you need to have a good record, right? What are your thoughts on using feedback, or how feedback interacts with trading?
Yeah, that's a really good point you made about trying to tweak things. I think people buy courses, or they have forums, and then they always want to tweak them. So that's a good point. I would add to that, I think it's important, especially if you're trading the higher time frames. Like you said, if you're trading a 5-minute, yeah, you get a lot of feedback, and you get instant feedback loops, basically, right? But if you have a higher time frame, figure out ways to create that same sort of repetition, but not doing it necessarily in the live market. So you could do Forex Tester, do some back testing, just practice your setups. You could look at your old journal entries and take a look at the winners versus the losers, and kind of focus on the losers and see what you're looking for. And then at the end of the week, you can also take a look at the trades that you may have missed. And, that, like you said, that could suffer from hindsight bias, but that can also give you repetitions that will allow you to improve faster.
Yeah. And yeah, that's great. And the screenshots too, like if you have a screenshot before, like at entry, and a screenshot at exit, right?
Yeah.
And you can have a screenshot of what you consider to be like a perfect setup and compare that to the one that you're about to take. Make sure, like, am I saying like a similar thing here, or is this very different? Like for me, as a pattern trader, that became really important for me to make sure that I knew that I was trading the pattern and what I saw and not what I thought. The more you get into news and stuff, and I love FX Street. Like FX Street's awesome. They're awesome. But spending too much time on there and reading about what other people think about the markets, to me, that's something that, well, it's the same with any business newspaper or any business website, like any economic related thing. Like you can really get stuck, and to the point where you're blind to one side. Like you just buy only or sell only. So yeah, it's really tricky. Yeah.
Okay, cool. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only, and is not trading or investment advice.